Thank you, sir.
You're welcome. Okay, so I want to show you people something. Yesterday, I gave the trade somewhere around here for a buy, isn't it? I don't know at what point any of you might have entered. I don't know those that even entered because somehow people will wait till the thing moves up. Where did I give exactly? I don't know. Maybe when this thing was pulling back or maybe around here. But let's just say it's even at the tip over there and your stop loss is below here. We were targeting this point. I think somewhere here in the middle or where. Is it the top? I can't remember. It was this high we were trying to target. But I know before I do give you people, I must have entered first. So when you see the price pulling downward, I'm talking of this red candle now. Let me shift this thing for you people to understand something. When you see price starts pulling downward, that is the bright moment for those that might have missed the signal and they come and they see that price is going against. Just know the type of strategy that is being used. And then you can just enter. So if you know that it was because of this double reversal pattern, then you can just enter. Even if this red candle is pulling downwards. But it was news that caused this one. So it can't even give you the option. It won't pull down with, like gradually, it's going to be with speed. So when you see it happening, let's assume it was this particular one that was coming down. You can take your entry at this point. You have started though. Is the class going on? I thought the time is written there already. The time is written there already. People still ask that, is it going on? Blessing, you can be answering them now since you are defending them. Okay. So you enter. Now, what I wanted showing is from here, your point of stop loss. This is how many pips? This is about 19 pips. And your TP from this point to this other point, this is about 36 pips that you are trying to get. Anytime you see price pushes up like this with speed, and then it reaches 1-to-1. It reaches 1-to-1. Even if it doesn't reach 1-to-1, it reaches somewhere significant. Hear the statements I'm using, because some people do come, they think as if I don't know what I'm saying. I always know the words that I want to choose when using this thing. It reaches a point that is significant, or it reaches 1-to-1. Instead of you breaking even, as some people were asking, because when you begin to see this candle coming down now, you will be afraid and some will want to exit. And if you continue like that, when are you ever going to, you will become tired. There's a point that you become tired in Forex if you keep just catching small moves. But also for you to catch the big moves, they know that everyone knows that they want this market to reach here. Even that of today, everyone knows that it's this point that they are targeting, this particular point where there is an order block. And that is what I'm going to show you people now. Everyone knows we want to clear this high, these points that people's money is there. When you clear it. And there's a little fair value gap that has not been filled. So by the time you see this order block that is here, when it enters into it, everyone is expected that the price should sell around this point. But you can see what it's doing. To go up there, they don't want it. And they know that everyone wants that this price to reach here. So Forex is more of manipulation. They want to twist you until you become tired. If you've been watching this market in the morning, you become so drained that you may force yourself to enter any trade that you just see. And that is what they want. Okay. So one thing that I kept emphasizing is the issue of you being very patient. It's not just everything you want to jump into it. A market will push down, you will jump inside, push up, you will jump in. It may give you money at some point. You may think like you're a pro. That's why I was posting those rules in the morning over there. Look, it can make you overly happy, especially when you enter in gold and you see it pushing quickly, you will be so happy. But the day that thing goes against you, you will regret why you even started Forex. I'm telling you. So the best thing is, no matter how your village people are like shouting into your ears, please and please don't listen to. Get growing consistently is 10 times better, even 100 times better. Because I've been seeing people asking, even on YouTube, how can I recover from a large loss? How can I recover from a large loss? Why did you enter a large loss? Why? Why did you even have it in the first place? If your account is $100, why are you risking $50? And then when it's taken, you are angry, you enter another and to recover, they take the remaining one. Let's say it's just $10 remaining now. You are now drained. You don't know what you are going to do. If you are having a $10 account, why trade on a regular account? Go and change it to a cent and be risking maybe 20 cents to get 40, 20 cents. That's the safest way and mentally right and stable for you to do that. Because they know from that yesterday's thing, they know that if it pushes up, look at just this tiny gap remaining. They don't even want it to push the market. They will wind you, come down, move up. You will think it's happening. You will think it's happening. I won't be surprised if this market pushes down again here before pushing up to go and reach this place where everyone is targeting. Because they just want you to be emotionally destabilized that you know. And the earlier you know this, the better for you that if you enter, just zero your mind that that money is gone. That will make you to actually wait for that, your particular entry. So just don't hop into everything that you just see. It may take time, especially if you are having a small account. If you have a large account, you can enter a single lot. And if that thing goes, even after 2 or 3 days, you are okay for the whole month. If you are not the type that is so wasteful. But then it takes time for you to grow in these things. Don't rush it. Don't rush it. I am emphasizing this risk management. You may enter something you would think, you've made it for that day. But that very same day again, you are now overconfident. And before you know, you enter another lot, you say, I have known how this market works. You will not know how, you are not the one pushing it. You can see something clear. There were points that everything was just showing us that we should sell everything, including the news, including RSI, including the double reversal, everything was there. Then you now enter a big lot. And that day, it did not go. It gave us a loss. So don't be overconfident in Forex. I'm warning ahead of time before I even start this. So having known that, always calculate your risks first for every trade. That they just send a signal does not mean you should enter. If somebody had a smaller account, at the time that they gave this signal, if you know you can't actually, and we are aiming for this high, and you know you can't actually take it, what you should do, because of your risks, check this is 1.9. So it's within you have to wait for that market to pull back and look at it. So if I given here and it's more than the 2, for those that have small accounts, you would have waited for it over here. You can see to pull back this red candle that you are seeing. You wait for it to pull back, and then you can enter with your risks. And if it had gone up, you would have gotten 1-to-1 at this point that it pulled up. And that is where I want to show you guys how to do that 1-to-1 stuff. You see, one thing is whenever market pulls up from your point of entry, the reason why you are taking that entry there is because many other people are seeing it also. That market is supposed to be at that point. Yesterday, Patrick and Jide, they said they entered because of RSI. Look at it. This particular low that was created, look at it over here. It was cleared. It was cleared. And look at this particular one. You can see it. So if they entered because of RSI, let's assume they don't even know this double reversal pattern, but they entered because of RSI. They will be entering around this point. You as well. You entered because of double reversal pattern. Is because of this. Another one will say, no, a low has to be cleared. Another and see it here. You see, everyone is entering around this point. The market makers know that everybody entered around here. And since you enter here, they know you won't target 1 or times 0.5. They know They know you may be targeting 1 to 2 or 1 to 3 or 1 to 4, depending on your strategy. Since they have known like that, if this market starts pushing up, many people will begin, in fact, like beginners, they will start buying up here. So they want to, so if you are buying at the upper side here, for you to even start like that, your stop loss is going to be very low because your money is not enough. So imagine if you are buying at the top here where this green candle is, let's set it at the top here. Where do you expect this market to go? This is about 38 pips. Where do you expect it to go? It's because you don't know how to trade, and most times you have a low account. So they will want to protect their account by reducing the stop loss. So they will reduce it to somewhere here. That's why I say it's not based on pips. So you can't set stop loss based on pips. You set your stop loss based on the market structure. And I'll talk about market structure. If you don't know market structure, no need of you even doing other blocks or fair value gaps. I'm telling you the truth. You will see it. So if you reduce it here, you say you are just risking 11 pips. The market doesn't care. It has to come back to the point where people entered. 90% of the time, you will see that the market always comes back to where you entered again. So if you know market is going to come back to your point of entry, when it pushes up, you know that you start seeing, one thing is for you to know market that will move will continue moving. You will see it hesitating here, dancing. It will do as if it wants to go up. It seems it can't. It will melt down small and push up. When you see it like that, there's something eating it up. There's something that is eating up those orders that is preventing it from pushing up. This thing you may not see it clearly on Forex, but I wish if I had like crypto, you can see the order book, the books where like a kind of a graphical representation of the orders. You see somebody will have a very large order that wants to sell at this point, and some are buying it. The large order for a sell will go up. It will just be like as if he's opening its mouth to be eating all the buys. And when it has finally eaten, you start see price dropping. It comes up again. If that order of this sell has not been fulfilled, no one can break this point. It cannot be broken. That's what you see it happening here. After it reached, price pushed down again. It tried going up, it could not. It came down again. It tried going up, it could not. And you could see it till today is trying to go up there. So if that order is still there, still this price point will be very difficult to break. So this is a major point of resistance. Okay. And those resistance as a result of a large sell order that is there. And they usually place buy limits. So when, even if they are sleeping, it will still hold because it will still be strong when price reaches that point. Okay. So whenever you enter, that point of your entry is not safe yet. When I checked you people's conversation, they actually understood the thing. If, as far as this red candle, the highest wick has not been closed above with a green candle, there is no any safe place for you to set as your break even. Even if you break even here at this particular point, this price will take you out. So price will always come back to where you entered before pushing up in that direction again. Now, if you have known that price will always come back, sometimes when it comes back, it passes straight down to your stop loss and continue in the opposite direction. So how can you prevent these things from happening? It's a very simple thing. Whenever you see price push up with speed like this and it's almost at 1-to-1 or at a major point, this major point now is this fair value gap that you are seeing and this order block. So what you need to do at that particular moment is for you to take partial profit. Your stop loss will still be maintained here. It will still be maintained, but then you will take partial profit at this particular point. Now, this is where you need to understand lot size and how much you are risking. You see, when they tell you people to go back to the beginning, to the basics, people think you don't know what you are doing. What usually happens is, assuming you are entering now is this one there? So assuming now you are entering this trade now with let me give something reasonable that most people are using. Let's say 0.1. Let's say 0.1. 0.1 lot. Do you know from 0.1 you can reduce it to 0. It's just like as if you entered 0.01 up to 10 times. I'm talking of the lot size now. So a 0.1 lot is equivalent to 0.01 up to 10 times. When market pushes up, you can take your partial profit here. And I prefer you take something like even 70% or 60%. It depends on the kind of lot size that you are entering. Okay. So, but it should be around that above 50. It should be above 50. So I prefer 60 or 70. Why I'm saying that is because at least you will have something. You will still have something. Okay. So if you risk the whole trade here, assuming that it is 0.1 you entered, the pips you are risking is 21 pips. So it means the total amount that we are risking is how much? I want someone to answer, please. I want to really know if you people are following.
$21.
Good, $21. So it means it is $21 you are risking with 21 pips. So by the time it pushes up like this, so let me use this tool to know how many pips it will push up. From here to this point now, it has moved 19 pips. So it has given you $19. So by the time you take your partial profit here with that 0.1 lot. Now, know that even if it's a single 0.1 lot position you enter, you can take a partial profit from it on your MT5 and on your MT4. So what you will do is you will now simply take like 70% of this. So this could be 70% of $19 will be what? Let me see. 70% divided by 100, 0.1 times 19. So you are going to take $13 and you are going to leave $3 there. You are going to leave $3. So if you are taking 70% of this, how many lot size are you going to remove out of 0.1? Who can answer? Mathematics, math. All these decisions that you guys see that I'm teaching you, but you make these decisions within 5 seconds. It's very important, even in other blocks. That's why I want to, because other blocks, anyway, let's reach first. Let me not be mixing up. So tell me, how many lot size are you going to remove?
0.06.
Huh?
0.06.
Okay, one person said 0.06. That's Jide, right?
Yes, sir.
So if you remove 0.06, that will give you 60%. So if you have to remove 0.07 to give you 70%. Some don't want to answer. Yes, is 0.07 lot. So you have to remove 0.07 here. It means you are leaving only 0.3. Now, when you leave that amount there, don't shift this stop loss. You don't shift it. You leave it at that particular point there. And once you leave it, you will be aiming for that particular point you wanted aiming for. You'll be aiming for that particular point that you wanted aiming for. Why we are doing this is you want to take something and hold. If you take 70%, you have gotten a tiny little amount of profit, because here you were risking $21 in order to get times 2 or times 1.6 from what the market structure is showing us. So we are aiming for times 1.6. So if we are risking $21, we want to get $36. But now we have taken off $13 off. So if you've taken $13, you're only left with 0.03 lots inside of this particular point. You are left with 0.03 lots. So if you are left with 0.03, even if this market comes back again to hit you at this particular stop loss level, how much will you be losing with 21 pips? Let me hear again. How much will you be losing with 21 pips?
Ghana $6.
And if you are confident, you tell me that he says that it's $6. I hope people that are following, they know. Those keeping quiet, I hope you know. Don't be assuming that you know, then you are not. Because for every 0.03 now, it means it's 0.3 for every 1 pip. So 0.3 times 21 pips that you are risking, that will give you $6. So you remember you've taken $16 and $13 out of it minus 6. So you still have even $10 as profit. You can see what I'm talking about. So it will not make you to fear the fact that this market is going, or it has been dancing for 1 day now, getting to 2 days. And then you will now leave it quietly. If it does not come to hit your stop loss, you leave it. If it continues in your direction again, remember from this point now of this $19, you have $3 already dancing around here. So if it ends up going your direction again, from this particular point to this other point again, that's 17 pips. So you can see it means 0.03 times 17, that's 0.3 times 17. So you have additional $5 to the $3 that you have already, Abby. I hope you guys are following.
I'm here.
Yes,
Okay.
sir.
So it's like you have an additional $5. So the money you took yesterday, 13, and plus 5 again, that will give you a total of $18 that you have made. But then you won't be afraid of the market. It is far better than breaking even quickly, because if you see it pulls up and you break even, it will take off your money. It will surely come down. Not surely, there's nothing surely in Forex, but most times, okay, it will. I'm so used to this. Okay, it will, most times, it will come back to your point of entry before pushing up again. Look at what is happening now. Now, I believe even from yesterday, as people saw the way the market, and one thing, market can make you think it will never reverse again. And it will come down. Look at it. It reversed up, still come down again, reversed. And at the end of the day, look at it going that direction now. And then you say, hey, if I had known, I wouldn't have exited. So this is the best way for you to do. Instead of breaking even, right? You take a partial profit, fix your stop loss there, but ensure it goes more than the 50%. If you take only 50% off, when this thing comes back and hits you, it's just as if you did not enter the trade. So why did you even? That's why I aim for something that it should be, at least, even if it comes back to hit you, you still have something with you. I hope everyone has understood this thing properly. Okay. So when there's quietness, you now know that, okay, everyone has understood. Everyone has understood. So now we go over to other blocks, which is the next thing that some people requested for. Now, if you are going to, I've told you people that no matter, most times, people look for different strategies because sometimes the market can be frustrating. It will frustrate. Who are those that are making noise now? You can keep quiet if you. Okay, so it can frustrate you in such a way that you can stay for days, you will not see any setup. So whether you are doing support and resistance, you still see it. There's no setup. Whether it's trend line, you will not. FIP, double reverse, you will not. Other blocks, even other blocks, You may think as if the order blocks, they form frequently so you can easily trade them. It's not every order block that you will trade. It's not. If there are conditions for you to trade an order blocks, and those are the things that I want to write down for you now. Okay. So for you to know that, okay, you need to use even an order block, you should have a trend. You should have a trend, know the direction of the market. So for those that I will be asking Avi now, what is the direction of the market now? Since you are the one that requested for this class, what's the direction of, are we in an uptrend or in a downtrend? I want to hear your response. Huh?
Mostly downtrend right now.
Okay, we are in a downtrend right now. Why?
It's lower highs and I want to say lower lows every time, but around that 12 p.m. seems like it's making higher highs, but lower highs and lower lows right now.
Good. So we are making what? Lower lows. See a low here, another low was created like that. It keeps going. If you check now, it depends on the part. I was thinking maybe you say it depends on where you are looking at, but then it's still the same. You can see that if at the point you are looking at, look at it, market comes here, it comes down again. So whatever point that we are targeting now is for it to enter here, then it goes down like that. Let's say it clears this low around this point before pushing up again. Okay. Now, those are the things. You must know the market structure. If you don't know how to draw these things like this, you may think it's looking simple for you, but if you don't know how to draw it like this, the way you see it happening, you are going to be losing if you are going to use other blocks. Because other blocks, you need to know when a break of structure has occurred or a change of character has occurred. If you don't, when you begin to see tiny places like this type of movements like this, it will confuse you. When you see that, oh, this kind of consolidation that happened, you won't even know what is happening now in the market. And let me tell you, no matter how good you are in Forex, a point will come that when you just look at the chart, you will not know what's happening. Don't force yourself that you must know what is happening in the market, like the structure or where the direction of the market is. When you see it like that there is no direction or you are not understanding the structure, it's better you just let it go. Okay, so take all these points seriously. Don't just come to the chart every day and say I must take a trade every day, and this thing is this a downtrend, an uptrend? Or you may not know what is going on now. So if you don't know what's going on, just simply leave it. It's not a must. Now, having known that it is a downtrend from what he's saying here now, it depends also on whether you are a day trader, a swing trader. So the time frame matters. The time frame matters. If you are a scalper, you may even go maximum of 1 hour. So even these hours that started here for how many days is even too much for you to take a trade. Okay. So what are we looking for? When you want an order block that will lead to a break of structure. So that's point number one. An order block must lead to a break of structure or a change of character. So we are looking for something. And when will you know that, okay, a break of structure has occurred? When? If I ask you people now, let me remove this thing and ask you guys. Now. This particular point where the market came down here, this particular point here, is there a break of structure here or a change of character here? Let me shrink the chart for you guys so that we'll know. If anyone even wants me to shrink them more, you let me know. Is there any change of character here or a break of structure here?
Exactly where, sir?
This particular point. It's not only him, because you people, if you want to trade it to, these are the things, this particular level now, because we see that, okay, market came like this. From this point, market went up. It came to this point. It went up and reached this high. It came down to this point now. Okay, before pushing up. So I'm asking, is there any change of character or break of structure around this point? Is Armstrong is available?
Yes, sir.
Yes.
Break of structure.
Yes, sir.
Okay, you see,
Uptrend to
and
down.
he's the one that
There
keeps
is.
asking me always that I should be. Is there a change of character here? He has disappeared. I saw him just now. He has disappeared. Okay. Okay, so all of you agree that there's a change of character, right?
We have change of.
Yes, sir.
Yes, sir.
Huh?
Yes, sir.
Yes. Okay.
Yes,
There's
sir.
no change of character here. There's no change of character, and there's no any break of structure here. You see? So if you don't understand, because it's just, this is purely a consolidation. Nothing is happening here. The whole of this thing that you see from the highest point where it reached to this point, to this particular level, this low, this particular low that is here. Let me draw the low very well. Let me show you people. This low that is here. Okay, this was what was formed, and it formed this highest point here now. The entire thing here is gathering of liquidity. There's nothing happening here. There's nothing happening here. So anything, breaking anything inside here is nothing. It's either this low must be broken.
I thought you were showing the place that you put that rectangular shape.
Yes, of course. Is that part that I'm talking about? That's why does the market care how you do your there's not any break of structure there. Yes.
Please excuse me, I want to understand something. You were pointing at that place that you put that rectangular shape. Between that one and this other low that broke it. You didn't talk about this other lowest, the low one. So if it's this one, that means there is no change of character. But if it's this one, I thought it broke this other previous one.
It did not. I don't know if you understand what did you know why I told you guys I'm going to shrink the chart? Because I told you, if you want me to even shrink it, I will shrink the move. There's no any change of character here or break of anything here. They are just forming liquid. So this market, the whole of this thing that I see is just ranging here. Nothing is happening here. Why I'm saying that is when we shrink this chart, you will see. When we shrink this chart, you can see from here. Look at it. Market started from this particular low. It went up, isn't it? It got here. It came down here. And then it moved up to this highest point. So as far as the market is concerned, this point here that you are seeing, and then this other one that is here, market must make decision around this point. Anything happening around here, nothing has happened yet. So you see the entire thing is happening inside. You'll be saying it's breaking of what? No. The best place for you now to wait for your order block, as we said, is this particular order block that is here. So let me shift it to this. So it's this particular order block that is here, this point, this low. Why am I saying that? You can see it created a lot of fair value gap, this particular fair value gap, this other one, and then it pushed up and broke this structure that is here. So let me delete and set this break of structure. So this high here was broken at this point. So there's a break of structure around here, just to add for you, as you guys are so used to this BOS. So there's a break of structure. So this order block now pushed up to break this structure here. So we are still in an uptrend. And if this low is not broken to close below with a full candle, this market is still in an uptrend, as valid as possible. You can see it. That is how it is. So this is the only valid order block that you will have to wait for market to enter into it. And you can see it has been trending down to enter. It has gone up to come down to enter. It has not really entered. It like this. So you expect that maybe when it enters inside this part now, which is another one that is there, it pushes it down to enter inside here. And when it enters, the market should still pull up to go and clear this high if this thing is maintained. If the uptrend will be maintained continuously. Okay, that is how you know. Now you can't be saying that this point that is nothing is happening. They will just use you for liquidity in the whole of these things. The way you are seeing the entire this thing, they'll just be taking it. Go here, take it. Go here, take it. That's just what they're doing. When they are finally happy with what they have taken, they now push the market where they want and then begin to push it with speed. Okay, so how would you know where to pick? What are the other blocks and how to do them? Other blocks usually are like orders of large institutions, big players in the market. So what they want to, if they enter the market must respond. They are the ones that push, that you see these green candles. They don't enter with tiny things the way you are seeing it happening during the Asian session like this. When they enter, there is a significant move. There's a significant move and it creates a fair value gap. So you are looking for an order block that has a fair value gap attached to it. That makes it more stronger and it makes it even more valid. There are different ways. There are some that they may not meet up to all these criteria, but still it will hold because a lot of people trade it. Even if they don't know, they just enter. There are some people that any type of order block they see, they trade it. You must have a very strong mental stability for you to do like that. Because you can say, okay, for today, I take 5 trades in a day for other blocks. You will say it like that. So if you are going to have $100, you say divide by 5. It's going to give you 20. So for every entry you are taking, any other block that you just see, you enter, you set it. They don't check anything. Nothing like that. So you see this other block that is over here, they enter. Nothing, whether it breaks any stock, they don't care, they enter. Okay? So they are risking 20. I want to show you people what people do. And everyone, it depends on your mental stability. I've been saying it. You just place your stop. Another thing for other blocks, don't try to risk it that you enter, then you are widening. No. Is below the other block just to make up for your spread. Don't go increasing any stop loss point. This is just 9 pips you are risking. 9 pips. And whatever high it reach before pulling down to enter into that other block, target that high. That is what you are trying to do. Target that high. You can see it. And it gives you times 4. Times 4. That is how other blocks work. Oh. Times 4. They give you more risk to reward. But anything can happen. So if the person had reached the first $20 from just this 9, so if he's going to reach $20 from these 9 pips now, this is like $0.1 that he's going to, or 0.2, isn't it? So you are going to enter with 0. Am I right? I hope people know how to calculate this thing. Let me check. I hope I'm not the only one in this class now. Okay. And there are people.
Not that.
So how many, if I'm risking $20 in this trade now, how many pips or how many lots, sorry, am I going to enter? This is 9. This is about 9 pips. Let's say it's 10. Eh? You are going to enter with 0.2 lots. You enter with 0.2. I just hope you people know these things. When you enter with 0.2 lots, if this thing goes your direction, you've gotten times 4, which is $80. Times 4, $80 from this. You can see it. Eh? So if you have gotten 80, they wait for the next order block again. Anyone they see around here, they enter again. So they wait for another one here. And they will be targeting any high that it reached before pulling down into that. So if price got to this point, this particular point, before pulling down into this other block, when it enters, they are targeting that particular high. And as I said, initially, when I was teaching you people this taking of partial profits, if you had entered with 0.2, you have entered with 0.2. By the time market pushes up even to this now, It has given you even more than half. It has gone even more than half. You can now take that your what partial profit that I told you people about. So if you were risking 20 here and it has given you even times what? Something like times 2, right? This is 9 here. 9, and it has given you like 23 pips already. So that's like how many? Let's say from here to here, this 2 times 2. Okay. And you are taking what? You are taking like 70%. And if it reaches this times 2, you can even decide to say that, okay, you will take 60%. And then you allow the remaining one to go. Okay. It gives you more profit as that. This is how you trade these order blocks. It tends to give you more risk to reward ratio. Okay. That's how some people do it like that. Any other block that they see, because they know that if they're entering, they are going to be risking low in order to get high. So you are going to divide the total risks you want to risk for that day. If in a day you only want to be risking $10, divide it into like 3. So for every one that you are going to be entering, you do 0. What now? So for this particular, and let's say this is 10 pips, and you have $10 for the whole day, divide by 3. So it's $3. So 10 pips will give you 0. What here now? 0.03 approximately. So you enter with 0.03 and it's giving you times 4 of whatever you were risking. So if 3 times 4 is what? It gives you $12 for this particular one now. For this particular one. But the problem with this type is that it's not very reliable. However, if you are able to get even 3 trades correctly, consecutively, you can see it gives you times 4, times 3, times 3. That's like you're having like times 10 or times 12, okay? After taking 3 trades. And if for every risk that you're risking is for the whole day is 10, and in a day you are getting times 10 of what you were risking, you got $100. Even if the next, you need to be losing 10 times, of which is not possible. You see? So, but know that if you are trading this type, you should have that strength of, your mental strength should be very stable and strong. Because the first one you try, it gives you loss. You see the second one, fear will catch you. Fear will catch you. If you know that fear catches you like that, then it's better you don't trade such things. You wait for these high ones that are very high. Probability of it happening is very high. When price enters inside of this, is very high. Okay? That is how you do these other blocks. Why am I saying that? A major player is here. That's the reason why they pushed the market up with speed. Look at it. It formed another order block, pushed it up again to clear this high, causing a break of structure. So for you to do, you must wait for the price into when it enters into this. Now, how can you know when to trade it? There are 2 ways that you can do that. First, you are going to enter the tip of that order block, just at the tip. Why I'm saying that is because sometimes it will just tap the tip and it will begin to go. It will never give you the opportunity. It will never give you the opportunity. Okay? So it can just tap into this tip of the highest red candle here. You were in a sell. So you look for the lowest candle that came down, like any bearish candle or any doji that you see, any bearish candle that clears any point before the move started happening. That is your order block. When you can't see it clearly, pick the lowest wick there and the highest of any of the reddish candle. That forms your order block. And then you wait. So just at the tip of it, you put your buy limit. Because one thing with these things, you can't really be waiting for it every day, looking at the chart like that. When will this thing enter? You may not know. It may even happen when you are sleeping. It may happen when you are out to the market or anywhere. You get? So if you are going out, you can put pending orders. So for this particular pending order that you want to do is a buy limit that you want to enter with. And then ensure that you don't just place a buy limit. You also set your stop loss. So that buy limit comes with a stop loss point, or ensure you set it properly. And one thing again is that if you set a pending order, give it time where it will expire. Because by the time price starts going up, never coming back to this point, you forgot that you have set a pending order. Okay? And then price now comes down one day that you never knew about it. You entered, you saw that you were in a loss. You say you did not enter any trade. You entered though. You placed this thing and you forgot about it. Are you people on getting what? So I have made a video about those pending orders, all the types of pending orders, when to use them. I've made a video about them. You can set it here for a buy limit, set the stop loss over here. And then you can give it the option that should it only be valid for 24 hours, so that if this price did not fall inside here, it expires. You can give it a day that, okay, it should be valid only for 1 month or for 1 week. Or you can say until you delete it yourself. So maybe when you enter your MT4, you see that there's a buy limit there. And if it has not been honored for a long time, you can just delete it till the day you start seeing price approaching that point again. That is how you do these things. If you forget, I'm not the one that you hold responsible. Neither is it anyone in the Forex market. Okay? So you set your buy limit order here. And then you will target the highest point, that because we are in an uptrend, so you are expecting price to enter to continue. That is how you target what high probability, or should I say valid order blocks. The issue now is that sometimes price may never return to this point and it will continue to go. You have missed. There's nothing you can do. You can't force the market. The person that entered for this one may get his own here. Okay? So it's left for you to make the decision. But if you are able to wait for it inside of this particular point with just a pending order, you are not looking for any particular pattern for this one. Oh, is in the second one that you are going to look for a confirmation. Everything has its advantage and its disadvantages. So you should know which one will you wait for. Wait with a pending order. You can wait with a pending order. You will see that sometimes price will rush and tap into this and begin to melt, pushing upward without giving any this thing, especially maybe during news. During news, you can see like what just happened now. You see that point we drew. It just tapped into it. It pushed down to this level. You can see it pushed down. Do you know one thing with other blocks? Just with this, you've gotten even more than 1 to 1. Let's see. Let me enlarge it and see. If we were to sell at the top of just that thing, look at it. You just put it even what? Just, it shouldn't go above that. And then price came back down to this. This just 1 to 1 it gave. So know that other blocks are, you must have mind, though, not that you'll be seeing it that is coming and then you say, okay. So if you are going to tap, sometimes it will just enter if news is the one that pushed it down. It from a very high point, news can push it down. You start seeing it dancing here without going further. Then it will begin to melt up. This is the sweetest one that most people with other blocks, they love it. Okay, it won't give you any wasting of this thing. When you see it like that, you have gotten enough. You have gotten enough. You get? So you can what? Take your partials, even at the TP, and wait for it if you want to wait for it. You get? But look at just the distance remaining, just a few pips. Is your ability to grab what the market gives you that you will keep making progress in Forex, because it must not always play out exactly the way you want. It's a probability, and you are trading probabilities. Okay, but you are using patterns too, because you've seen this happening like this. You expect that it should give you a high probability because it has been happening like that. Okay, so in that particular one that rushes down, those with pending orders will always get it. They always get it. The other option is for those that wait for a confirmation. So even though we are on 15 minutes time frame now, they will go down to a lower time frame. So it could be 5 minutes, it could be 1 minute. Most times it's 1 minute. That's where you pick it, because sometimes even 5 minutes before it gives you that it has changed a character or there's a break of structure, you will know that price must have moved further. Why I'm saying that is, let me show you. If price was coming into that part that we are expecting, is coming into it like this, is coming into it like this, it will enter at 5 minutes like this. By the time it gives you that there's a break of structure on 5 minutes, it's already here. So why were you waiting this long now? You can see you would have just simply entered with the pending order. Now imagine is at this point you want to enter. You get, and sometimes it will create another order block or another fair value gap down here, and it will never get back into it. Okay, that's for the confirmation. I will show you guys. That's for the confirmation. So most times is 1 minute. Is 1 minute that they wait for. Because even before this thing pulls up like this, even in the 1 minute, before it pulls up, you must have seen that thing happening on 1 minute time frame. Let me show you how it can happen on 1 minute time frame. So like this, 1 minute will come and enter, pull up. It will come down like this, come and clear this part, then push up somewhere here, then come down inside. That is when you will now enter. You will even see a much lower place to place your stop loss. So you shift it even closer, and you see your point of entry even will be shrunken. So it will even be sweeter for you to enter, and you will be having higher risk to reward if the thing goes your way. If it goes your way. So I'm going to show you guys how you do that. Okay. I'm going to show you guys how you do that. Now, price has entered there. Okay, let me just finish what I'm doing. I'm not going to enter for other block now first. You have to backtest all these things that I'm saying. Okay, then. So at this particular point now, let's go to 1 minute. If we were waiting for price, so that we'll see what happens in the 1 minute time frame. In the 1 minute time frame. So if we were to wait for this, let me see if there's any point that price got to before turning, because we will need something that has happened. Let me see this part. Okay. So this particular point now, this particular point. Now, why am I picking? This was the lowest this week now, this week that you are seeing it. This is the week that gave the bearish candle, that gave the last distance before a push was made to clear this high. So when price came back into it, you are what? Taking your, so is your order block. You are going to end the whole of the entire of that candle, the wick, the length. So push it down to where it is. Okay. So we want to see if we are going to use a confirmation for those that were having those that are having pending orders. They just simply put this thing just like this, and then they take their entry. Okay, they take their entry, and your aim is to clear this particular point, because you don't know what happens. Somebody was asking that, can it continue to go? Nobody will know if price will continue to go, immediately falls. So you are targeting this thing like this, and you will have times 3.46, times 3.46. Okay, times 3.46. So if this thing happens like this, let's come to this particular date. Is what? This is Friday, 28th of March. Friday, 28th March. So let's see what is going to happen around this point. Let me put another thing that just happened here. Let's see. Let me color it to be maybe yellow. Good. So let's go to the 1 minute and see what happened as price was approaching that point. As price is approaching, go to Friday, 28th March. 28th of March. So we are there now. Let me shrink it to nowhere. So Good. This is the point, right? This is the point. Now, so we are going to look for a change of character when price was what? Now, this is why I told you that if you don't know when this thing has happened, you won't have that opportunity to enter. Because for you to know, there must be a what? A change of character. That is when you know that, okay, there's a confirmation. Now, on 1 minute, this was what was happening as price was approaching your, this thing, your point of interest. It came back again, okay? It entered, not inside now. It came back like that. It came back. You can see it's not clearing anything around here. Like that, it's still going down, isn't it? It now came down here. It still came down here, okay? Now, what happened to this particular point? And then it now cleared. And then went and what? Cleared. Now, can you see that there's a change of character here? Have you people seen how the thing? Let me just remove this thing for you to see how it's going to happen. Can you see it? This is where the change of character happens. And your trade is going to be taken inside of this particular point. Inside of this particular point. This gap. And this is, so you would have waited. Look at the fair value gap created over here. This fair value gap that is created here. This is the fair value gap. Immediately price gave that change of character. Can you spot it? Can you spot it when this thing happens? Can you spot it? Has cleared all these points where nobody was going above them, but all of a sudden it has gone above them and it created a fair value gap. So anytime it enters into it, you will take your trade there. You don't need any other thing that you want it to enter another point again. Just enter at the, just, in fact, when it's approaching close to that fair value gap that it created, just enter. And your stop loss, already it has created this point for you. It has created that point for you, showing you a low that it has cleared. Can you see the wick that cleared everything here before causing this break off and causing this change of character with a fair value gap? That is it. And then you now what is going to be just below here. Now, instead of you going below even this other block on the higher time frame of 15 minutes now, you see, you have even shortened the point. Price should not come down here again. And then you aim for that point where you see that a break of structure should occur. And you can see it's giving you times 3.2. It's giving you times 3.2. This is what you call a confirmation. You are waiting for a confirmation first. You don't want to just enter blindly. You are waiting for a confirmation. But if you don't know market structure, you cannot do this thing. You get? So I have shown you how to enter 3 things now. Some people enter any other block they see, they trade it. The second one is that some enter with a pending order at the one that is valid, where there must be a break of structure or a change of character. This one of these must happen. And then as it's happening, as the break of structure is happening, it should create a fair value gap at that point. So they enter anytime, they will just wait for it at the tip of it. They enter with a pending order. Your stop loss will be at the just below the order block. And I emphasize again, do not go too much below that order block. Don't. If it will go and hit it, it will hit it. Don't try to widen your stop loss. Don't do that. That's not how to trade the order blocks. Okay, you are just adjusting by going below that point. If it's here, you are just setting it by going just below it. So if you are entering at the tip over here, let's say, you are just set, this thing is to adjust for any spread. Like on CAT CHF now, you may have a spread that is very wide, okay? Or NZD ZAR of South Africa, and it may be very wide because not many people are there. So you adjust that. But if you are trading gold on this or something that has a very tiny this, or Euro USD that has a very tiny this thing, don't go setting anything like what are you setting it for? If market will come and hit you, it will hit you. And it's a must. There's nothing like there's a perfect thing that you will do as if you are that. You can't use intelligence in this thing. Well, let me tell you, the more you use intelligence, the more you lose. Okay? Because if you have backtested the strategy, you have seen that it gives you some losses, like 2 losses, 3 losses out of 10. Accept the 3 losses with good faith and wait for the remaining ones. That is how you do. Don't always be afraid that you don't want to have a loss. You don't want to have a loss. And not in this world then. So you just adjust for your spread. Adjust for some on NT4, their spread is wider even on Euro USD or on this thing. Okay, they tend to make it wider. I don't know why. So that is it. You just adjust and then you enter. You don't need to set anything wide. So as I was saying, you wait for the confirmation one. Others enter with a pending order. Any way that you are setting for the confirmation, it has given you a low already. It shouldn't come down. After you see this, we clears the thing and create this fair value gap, and then leading to a change of character. The price should not come back. You will enter immediately upon entry of this fair value gap. Nothing again that you are going to wait for it to fill any fair value gap or not, whether it fills it or not. Just enter when it's just entering into the fair value gap. Sometimes you want to allow it to fill it if it's so wide, even on the 1 minute. So you want it to come down maybe 50%. Because sometimes some people don't wait, especially somebody with a bigger amount of money may not even wait for the thing to enter that 50. They will start pushing the market up. So when that is happening, you will miss. You will miss. You can see. But one thing with other blocks, when it gives you, your risk to reward is very high. Sometimes it can even give you times 10 if you are willing to wait. Though. If you are willing to wait. Okay. So that's how. Then one thing I will caution again, if the point where you are targeting is so tiny, let's say it's from here to this point, this is on 1 minute. When you see your spread on 1 minute, it's going to be very wide, something like this. It will look like this on 1 minute. Don't go and be doing this type of trading with CAT CHF, all these ones that have a wide spread already. Even on 15 minutes, you see that the spread is wide. You go and then you want to just scalp it. You say you want to scalp. That's what they use. They say, let's scalp. You enter, you are entering something that you are scalping. Already spread is wide like this. Market needs to go like, what are you going to gain from that? So look for pairs that people trade commonly, like Euro USD, GBP USD. That is what you will you trade with, this type of thing. But if you know that the distance is very far, your target point, and you still think it has shown you a clear point, even with those that have widespread, that okay, the distance is very far, fine, you can now risk it, because even with the widened spread, it should move that distance before you exit. Okay, that is how to do them. So always look for these particular extremes. Like, so let me go back to 15 minutes. I've shown you people how the change of character happens on 1 minute. Okay, so you look for the extremes that gave rise to a break of structure like that. You look for those extremes. Those are the ones that are very valid, and as they are at the extremes, they should also create fair value gaps for you when you are seeing. So there should be a fair value gap protecting that order block for you to make it to be very valid. Okay, so then it depends. So ensure if order block is giving you 1 to 2 risks to reward, don't enter. It's not worth it. That's not, because other blocks, you don't want to risk one thing, then you hit on another. You risk one, you hit on another one that you're doing. And what's God help you if you trade everyone that you are seeing like that in it, like some people do, and they are targeting just 1 to 1, 1 to 1, and 1 to 2. It should be something like 1 to 4, 1 to 3. 1 to 3 is reasonable. Okay, for other blocks, even 1 to 5 is even the minimum. So you can even get 1 to 10. You can get 1 to 10. I don't know if you have any question. That's all about it.
This upcoming price action for Euro USD, would that be a valid order block right now?
No, it won't. It won't. If you are going based on which one now, that you are going to be trading every other block that you see, or based on the fact that you wait for confirmation, or they are looking for the extremes. Because here now, that was why I asked you people, is there any change of character? There's no any change of character. Nothing has been broken. Okay? Nothing has been broken. And if we are to even do the last green candle that gave that push before, so this is a fair value gap. This is a fair value gap. And this is the candle now that gave that the last green that cleared, you see it cleared with a wick. Most times they come with a wick. That's how to identify a very good one. Okay, they come with a wick most times. So they will clear a particular point and then create a fair value gap and continue. But for this one, there is no this thing, because is there any break of structure here? There is no break of structure. That's why I asked you guys at the beginning. Okay?
So you need a break of structure for it to be valid every time?
You said what?
You need a break of structure every time for the order block to be valid?
Yes, there must be a break of structure or a change of character, and then it should create a fair value gap as it is breaking that structure. It should create a fair value gap. So that fair value gap protects it. It protects it.
Okay.
Yes.
How many times would it be valid, as far as how many times can we use an order block or an area?
Oh,
How many
okay.
times?
No, for me, I prefer only once, because by the time once price has tapped for air, it's just like a trend line or any point of resistance. And that was why when I started, I explained it to you people. Let me show you something that is happening. You see, if price taps, let's say somebody that, why other blocks are valid is because somebody is placing a, like, not, let me know, use some, an organization, a hedge fund, a bank, you get, is placing a buy limit order around that particular point. So by the time they place that buy limit order, anytime their entries are being taken, their orders are being taken, is a large order in billions of dollars. So it's going to push, cause the candlestick to be so, to move with speed that it can't give anybody time to enter. That is what creates that fair value gap, those buy limit. So if initially they say they entered with, let's say they want to buy $100 billion of Euro USD, or let me make it something sensible like the way George Soros did. If he's first entering with $2 billion, okay, you are placing a buy limit of $2 billion around here, and then immediately price taps into your order, it pushes up with speed. But let's say it's only 1 billion that was being able to fill, and it moved up, there's still 1 billion remaining. So if 1 billion can cause this move from here and continue to go like this, when it comes down again, there's still 1 billion remaining, and it's only 2 billion he's using. By the time it enters again, he pushes the market up. And you, as you have seen this particular thing that is happening now, you saw it at first. You are waiting for it, that his orders, you are hoping, because you are blind now. You don't know that his orders, you don't know how many orders were taken, how many orders were filled. That's why sometimes you see that price will push up immediately to this point and get to this high. That's for the first filling. But you don't know how many orders of that particular person was filled, how much they intend to even continue buying. So that's why I told you these things are probabilities. By the time price enters into it again, okay, you are now going to enter based on the fact that there is an institutional trader, a large trader that is waiting with his limits here as well. So if you are lucky that he actually wanted buying the 2 billion and then another 1 billion was taken, it will reach this point again for you. Okay. But if he had only 1.5 and 1 billion was already taken, do you think the remaining 500 million will now reach this particular point? It may end up here. And that's the reason why we say that you take your partial profit when you see the price has taken to, don't force it, the market must go, you must clear this thing, you must clear this thing. Okay, take your partial profit when you have it over here. Don't be too greedy over the thing. Okay, most times people become too greedy, especially after a loss. You will see that you don't have confidence. Immediately price goes in your direction, you close. But then the day it gives you loss, you will now have that anger. You will come that you must give me, I must recover, I must recover. You will now have the confidence that you didn't have the other day that price was going in your direction. You get what I'm trying to say? So it's based on how many orders that are here. So if it taps into it, the first 1 billion was gone. The second 1 billion was gone. It can come and push it for you to reach here. And when it comes the third time again, you won't know that that man has gone his own, or he has already, if he bought around here, he has sold it at the top here, he has made his money. And then you don't know, you enter again, that the third time. It will now push up, but there's nobody to protect that point again. Okay? But then let's assume that you didn't even know. He entered with 1 billion, he pushed it. He actually had 5 billion. It entered here again, 2 billion was filled at this particular. It means there are a lot of people willing to sell to him. So he bought 2 billion. 1 billion here, 2 billion here. It means there's still 2 billion. So even when it taps the third time again, it's still valid. It will still push up. The issue with you is that as a retail trader, you will not know how many orders are being placed around here, like the large traders, how much they have. You get? So you can see sometimes it can even tap 3 times, 4 times, 5 times. It will, that's what some people will call resistance. You, Kuma, that you are here, you are saying is what? An order block that is valid, an order block that another will say that's a point of resistance. We will see double reversal pattern. Another will say there's RSI divergence. And everybody is all seeing the same thing. You people are all saying the same thing. It depends on what you are trading. But the person holding this thing here, by the time he has finished doing the business he wants to do, anytime that price comes, it will shock you that it's not that point again that usually holds price. It will just go down with simplicity. Nobody to hold that price there. You get how it is? So let me ask you back the question now. How many times do you think you can tap into it? It depends. It depends on Forex, or who is there, how much is having, the volume is willing to buy around that particular point. So if it's valid for you once, it's risky for you. So I will advise you, when you see it once, it works. The second or the third time that it is tapping into it, wait for a confirmation. At least wait for that particular confirmation where you see that there is a change of character and a fair value gap created. Any other question?
Is there a way we could see the volume at the certain areas?
Volume?
Yeah, as far as
Yes,
like,
there are some brokers that if you pay them, they can actually, I think you can do, most of these things are not free. There are some brokers that you have to pay them, but I don't know if the volume of all of these things, that one, I don't actually know how to do all of those things. And I don't believe in all those things because the volume can just increase, push up, the next volume now has reduced. How can you know that, okay, you are trading that? It doesn't really work like that. But then the one I love is the one on crypto where you can see the order book. So there are some in Forex, when you pay them, they can show you those order books. And order book, especially on Bybit, you can see a large order coming up. So when you know that that large order is coming up around that particular point, when price reaches that level, you see it keeps eating it, price will refuse going. And then as it is about to finish, another large order will come up. Then you know that that's a point of resistance. It will be difficult to break it. You can take your entry around that point. That's for crypto. On Bybit, I see they have order book. They have order book, but not on Forex. I've not seen it, at least for the ones that I'm using. Okay. Any other question?
Please, my network has been disturbing since. I'm just
I
coming back now.
recorded it. Who is
Okay.
talking? Who is the
I
person?
wanted to know if you will upload it very soon.
Who is talking? I'm seeing Samsung. Is this Samsung that is talking?
So it's Stan.
Okay.
My network has been, yeah, it has been. I don't even know that it has changed to Samsung. I will correct it.
Okay, then it's being recorded. I just hope you people light blessed
Yeah, so I know
template,
it's
and it's
recorded. I
because
wanted to
of
know
them
if
that.
you will upload it anytime soon.
Yeah, it has to export. If it's a lengthy video, it may take an hour or so exporting. So I will just put it up.
Yes,
Any other thing? Any other question? If there's no question, let's go back to our chat and look for RSI.
Sir, one more time.
Yeah.
The price that I don't know why, but I keep looking at the price action coming up, but in my head it feels valid. But can you please one more time tell me why that would be invalid?
Which one?
The one coming up right now, the price action currently.
Like I
my
was.
Head keeps.
Okay, like I was saying, right? What is your reason for buying or for selling if you want to sell at this particular point now? Where is your change of character, or where is your break of structure? That was why I
on the
asked you
5 minute on the lower
on a
on the
lower
lower
what?
time frame on the 5 minute. Yeah, I looked at it on the 5 minute.
And but even on the 15 minutes, if you are checking for the market structure, that was why I told you people that if you are checking for market structure, okay, if you are checking for market structure right now, what is the market structure? We are in an uptrend if you are in 15 minutes. But if you want to just trade only this particular point now, somebody that is trading, this is in an uptrend. Somebody that is trading, what do we call it? Fibonacci will insist that price should not come back to this thing. Let us draw it. You can see price is dancing now. It entered into the 0.5. It tapped 0.5. It pushed up. It tapped 0.618. It pushed up. It tapped even this other one now. It pushed up. You get? So for us now, we are trading, like for me, I trade my own, either RSI or the double reversal pattern. If this price, because I won't know whether this price is going to clear this and continue going up. We don't know, especially with the news of Donald Trump that is happening. Or by 9 p.m., or which it should be around 3 p.m. in you people's place, is going to talk about the tariffs. Okay, so everybody's eye is over here. Everybody's eye is here. If Donald Trump says something that is that people don't want, is going to weaken the US dollars. And if US dollars is weakening, Euro USD is going to buy for good. And we don't know. Everyone is afraid of war. He may say something nice, but there's a higher chance that he may say something that people don't really like. You get? So I prefer to buy this market. I will prefer to buy this market than to say I want to sell this market. You get what I'm trying to say? I prefer to buy it. And if he says that will happen by 9 p.m. So there's still a lot of time, but we don't know. This market could still sell down, be dancing around till around that 9 p.m. and it will suddenly shoot up and continue the uptrend that it wanted to do. You get? So the only way I will tell you is not just don't enter inside an accumulation. The whole of this thing that is happening here is an accumulation, just as the way I've explained to you, and don't force it that you must, that it should give you those valid stuff like that. So even if you are going to enter this market now, go to your 1 minute and wait for it. Go to your 1 minute. You can see that we are in the 1 minute right now, isn't it? So wait for your confirmation. Wait for your confirmation on 1 minute. So shrink your chart. So anytime that you see that it comes and it creates a fair value gap for you, so what you are expecting now, let me delete this thing. What you are expecting is, if this market comes up, look at it now. It came up like this. 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 Like this. Most times when it's about to happen, you start seeing the distance, the gap between these points, these highs and the lows will start reducing. So you start seeing something more of like this, and then something like this. Okay. More of like this. It will now clear it, then push down. This is what you are looking for. So when it pushes down and you see that there is a fair value gap, a wick has cleared anything around here, and then it creates a fair value gap, you will enter and wait for it. Wait just at that fair value gap, wait for it there. You get, and then you sell to the highest point on your, maybe the 15 minutes that you enter now, the highest point, any low that created that high for you, you will check. So you will sell even to this, any point that is up. Let's say something, this particular point that is here. Okay. This particular point that is here. So that's the only way for you now, is to enter with what? A confirmation. And just as we said, even this particular point was valid, this one was valid, and it's touching it the third time. So why do you want to enter blindly? You see, just what I just finished saying now. If you had tapped into it the first time, maybe here, and then this other one, wait for a confirmation, just like what I just concluded in the video. So wait for a confirmation before you take your entry using this other block. Okay? Wait. Any other question? and you see something like with a week. So if from here price started selling and breaks structure and come and break even this one and close below, you will just wait at any point where the fair value gap is created. You see. So that's it. Do you have any further question again?
No.
Okay. Okay. So any other question from anybody? If there's none, let's go back to the market and wait. Yeah, the Jide and Patrick, the RSI guys. You guys were just bombarding them yesterday with RSI. So let's go back and wait for RSI double reversal pattern. You will surely see it by God's grace. I know they will shout amen. Okay. So please, that's all. We will conclude. If there's no any other question, I will end it here.
Yes, I want to ask something outside what you.
It's cracking. It's cracking. So I'm not hearing you.
Something.
What was it? Hello? Someone is typing. Okay. Dr. Kingsley, thank you too.
Been teaching.
It's just now
Hello,
I'm hearing
sir.
you.
Can
It
hear
was
me, sir?
cracking. You said?
Hello, sir.
I can hear you now.
Oh, okay.
I can hear you now.
This is my name. Sir, can you hear me now? Can
Yes.
you hear me? Okay,
Yes. Network has taken her up. I highly suspect you are from Akwa Ibom, and they have a very bad network in Akwa Ibom. Very, very bad. Sunday doesn't come out, you sweat at the same time. No network, no light. It's very difficult.
On news days like this today, sir, what do you do? Like as far as trading decisions?
Trading decisions?
Like how do you make decisions during news days like today?
Okay, like there's news today. Yeah, at the beginning of the day, early in the morning, when I came up, I told you people, now I wrote down some things there. I told you that if you don't see your pattern very, very clearly, and don't go in. So if you are trading based on your pattern and your RSI, let me advise you people on what some people do. The reason why those patterns form is because there are people that are trading them, those that have the bigger capital, like more than you. I'm talking of people that use those 1 billion that you are seeing, and they can pay. Sometimes they pay even $100 million just to have information ahead of time. So they have even seen the speech of Donald Trump before that time. So they are the ones that will manipulate the market the way they want. And by the time they want to sell the market at exactly around that time, you will see your pattern will be printed around that time. You get what I'm trying to tell you?
So we wait until, okay, hold on. We wait after the news or until?
No, like for me, generally, I don't even trade news.
Don't trade news?
Especially CPI, NFP, and FOMC. Those are the, but you can see that most times because of the effect of the economy in general, fundamentals, have you watched that fundamental video?
Yeah.
So because of fundamentals control the market. So because of it, if they have known that the general outlook of the US economy, it controls a lot of assets, virtually every asset in the market. Even CAT CHF that you are not even, it has nothing relating to US. Once there's a major news affecting it, it will affect CAT CHF, it will affect crypto, it will affect everything that you are trading. You get gold, it will affect it. So you can see now gold is buying, and crypto is crashing. Because of what that tariff plan now, there's uncertainty. So China now, they are even dumping their Bitcoin. That's what is crashing, and they are buying gold. So you see gold buying, keep it going and reaching. All these things are because of the fundamentals. You get what I'm trying to tell you? So if the insiders now that they pay money for these things and they have the information already, because you can't be putting billions into the market by just merely using pattern. They will not do that. You get? So they know when they want to buy and when they want to sell it because of the information they have. So they may decide now that we are going to like push the market up, maybe Euro USD, because Donald Trump, from the speech they have seen, is not a good distance. You get? So immediately around that point, once he comes, like sometimes he will just even greet people. You see, they have started pushing the market because they know any remaining thing is going to be inside the listing. And you can't be doing that type. Why I don't trade news is that it doesn't obey your stop loss. You will be closing, it will not close. So even if, because your server, before your server will even recognize it has drained your account. So you may be having like $1,000, you want to risk only $100 in it, and then you see that it has taken $800. Even though you actually set a stop loss at a point where it should take only $100, it will not obey it. It will not obey it. You get? So because of that, you have to avoid any major news. But then there are some news now that apart from these 3 news that I do, most of the news now, they don't even push the market anyway because of the general outlook of the US economy. So they don't even push it. You get? But once investors now, they have a clarity, like they are very clear of where the market is going to go. You get? Once they have that, you can see that those news now will have very high impact. So I don't really trade news. If you are looking for my trading plan, I think I've talked about that on the psychology video as well, how I do. So any other thing?
No.
Okay, so let me ask what I wanted to ask.
Okay.
It answered what we've been talking about. So I wanted to ask, do you know anything about Pi network?
Pi. Is it Pi you said?
Yes, Pi network, Pi network.
No, I don't do all those there. What was it, mining or whatever? I don't do those things, so please. Crypto self, I don't want to have anything to do with crypto. Crypto, the people in it, they are not professionals. So you will buy something now, you wake up, you see it's times 500. Before you will say, this thing will get to this thing. Don't collect it. You will see it is down to like because fear, people trade with fear in crypto. Once they see candle going up, they'll say, it's buying, they'll start buying. So it continues to push. One news like this, it starts selling with speed that you can't even. I don't do crypto. Okay, so I don't know anything regarding it. But I heard people are making money now.
Do you want to sell your pie?
Are you buying it?
Is it meat pie or fish pie?
You did not sell the pie when it was $3.
Oh my! I did not sell pie when it's for $3. 0.6 you want to sell?
I heard that they lock some people out, like you can't really sell even if you have it till after some time, something like that.
Yes,
I'm actually holding my own anyway.
Yeah, so you see.
Yes, sir.
Okay.
Thank you, sir.
That's all then.
Thank you, sir.
You're welcome.
Yes.
Okay, bye.
All right, thank you.
Okay, for Avi, if you see this particular point, when price breaks it and close below it, it has now given you a valid change of character below, not with a wick, the way you see, because there's a wick that I've seen here. Okay, so if this price comes down now to break and close below this particular point, below this just this part below here with a full body, it is now valid. You can now start selling around that point, or you wait for it to retrace back to somewhere here. Then you enter to reduce your risks and give you higher profit. I think that's all.
All right.
Bye-bye. Have a nice